Good afternoon everyone, it's Richard Faulkner here for fxtradingalerts.co.uk. We are currently looking at a 15-minute chart on the USD JPY. This is a series of live trades which are going to be going out this week, just showing you how we enter the market, why we enter the market. I've had a lot of emails just basically people asking how to use the Sunday night technical analysis. So this week we're going to show you how to use it, and ultimately this is basically how we trade live in the trading room. So just clear this chart up. We're long at 7.1, just slightly higher there. We've got a stop down here at 5.1, and we've literally just entered the market. Now this is a spike down on news here. There's a combination of things here which have led us to enter this market. So basically we've got an inverted head and shoulders here. We'll start on the higher time frames. We've got on the daily, we've got a double bottom coming in here. Which can be seen quite clearly on the 4-hour chart. And if we go to the 1-hour chart, it's not as clear as on the 15, but you can see a series of inverted head and shoulders. Left shoulder, head, right shoulder, left shoulder, head, right shoulder. So this would indicate that this is a very strong possibility this is going to start moving up now. So how do you know when to take the trade? Well, basically it's really very, very simple. Obviously we've got a trend line here which we're currently just holding on at the moment. We've had a spike down below it on the news. We've got, if you look back in the history here, which is Monday, Friday, Thursday, we had left shoulder, head, right shoulder. We had a move back down to the right shoulder here at around about 1:30, and it's around about 1:30, 2 o'clock now. As soon as it comes back down to this right shoulder, it's a far better trade taking it at the right shoulder as opposed to a break of the neckline. Now the neckline for that would have been, just get rid of that. Neckline for this inverted head and shoulders would have been here. So if you take it on a break here, you can see that you've got very few pips before it actually came and moved back down. Now it's actually a pretty hard thing to do, is to buy into a market that's selling. But if you trade these enough times, you know 9 times, well not 9 times out of 10, but the majority of times this type of trade is actually going to work. So really it's just experience in the market that's going to allow you to take these trades down at this level. Now this trade might work, it might not work, but ultimately we've got a very tight stop at 20 pips. We've got a number of factors here indicating that there's a good chance that this trade is actually going to move up now, and I'd much rather have a 20 pip stop down here than have to have a 77, 60, 70 pip coming back down to this. And you know, there's every possibility that you could get a spike down below this shoulder here. So you're not even looking at a 70 pip, you're looking at 80, 90 pip, whereas what we've got is a 20 pip. So obviously you can trade a lot bigger lot size. And let's face it, this is all about making money. It's not about how many pips you make. So that's why you need to be buying down here as opposed to buying up here in the break of these necklines. So that's basically, this is why we've entered the trade. All our results for this week, obviously you can follow them on fxtradingalerts.com. We're going to post them on the website. We're also going to post them on our FX trading book, which is myfxbook.com. All our results can be verified there. And obviously this is just holding this trend line now. So ultimately what we have to decide now is where our target's going to be. So what you actually do for a target is, you can see we've got a neckline there for the inverted head and shoulders on this level here. You see left shoulder, head, right shoulder, break, false break, move back down. We need to take a measured move from here down to here, clone this drawing, put it on the break of the neckline. As it turns out, that comes in very nicely at the 200 EMA on the 1 hour or the 800 EMA on the 15 minutes. So if you can take our risk, which is this level here, to here, clone that, and it works out as 1, 2. So it's about 2.5 to 1, which is not a bad risk reward at all, actually. So that's basically how we trade. That's how we enter the market. We're currently 1 pip down at the moment. Like I say, I do expect this to move up to around about 77.22. But I'll stop the recording now, and we will start it as and when we get to some fairly important levels. Okay, so I mean, this is where it starts to get a little bit uncomfortable when you're trading, but you just have to stay true to your trading. Stay true to your trading plan. Not panic and just let the market play out. Ultimately, we are just going to move our stop down to 4.7, 4 pips, 4.8, 3 pips, 3 pips further down. But no qualms from moving it 3 pips. When you start to move it 10, that's when you start to get in trouble. But I really, obviously, you expect the market to just can't always turn on a dime, basically. So we're actually down right at this, coming down to this right shoulder right now. So fingers crossed. We are going to put a very hard stop at 4.7 now, and just let this play out. If it works, it works. If it doesn't, then it's 23 pips lost, and it's on to the next trade.